Welcome, everyone, to IBD's Option of the Day. I'm Chris Gessel, Chief Content Officer here at IBD. And with me today is Harold Morris, one of our leading product coaches at Market Smith. How are you today, Harold?
Doing great. Doing good.
All right. And today we're going to take a look at SLB, uh, a energy stock that is setting up. And Harold, can you tell me about this trade and what drew you to the stock and how do you want to handle it?
Yeah, what drew me to the stock was, we're looking at the weekly chart now, and it's pulling back to the 10-week moving average. That's the red line on the chart. So it is forming a base, but I'm what's been working this market is stocks pulling back to a major moving average like the 10-day or the 10-week or 50-day. So I'm looking at the pullback to the 10-week moving average and hoping for a move to the upside. So I'm going to sell a bull put spread on SLB.
Yeah, and the stock has been pretty tight. I mean, this consolidation is only 16%, which is 1% beyond a flat base. So I'll call it a flat base because that's what it looks like.
Hmm.
And this is actually a good type of action because it was a fairly deep cup at 38%. It came up and then it's consolidating tightly on top of that on that cup. So that looks pretty bullish to me.
Yeah, yeah. And one of the characteristics of a bull put spread is uh, you can make money on the trade if the stock goes up. You can make money if it trades sideways. If it continues to trade sideways, you're making money on what's called theta, on the theta decay and time decay. Or even if it goes down a little bit, you can still make some money on the trade. So that's one of the reasons why the bull put spread is one of my favorite trades.
All right. Well, why don't we jump into it and let's look at the details of the trade and what the parameters are.
All right. All right. So we're looking at the option chain here. So I've got SLB, which is the ticker symbol for Schlumberger SLB here, and I'm going to go out to the February time frame. So this is 51 days out. So I'm going to click on this here, and then you see the option chain. So just a quick refresher, you got calls on this side, puts on this side, and I'm gonna be selling a bull put spread. So I'm gonna choose let's go with I'm gonna go with the 50. I'm gonna sell this 50 strike here. So you see my mouse, and that might be kind of small on your end, but it says sell. So I'm gonna click on that. It puts the put that I'm selling here, and then I'm gonna go $5 wide. So I want a $5 wide put spread. I usually typically start out with a $5 wide trade, just a spread, just to see, okay, what do the numbers look like. So I sold the 50, so I'm gonna go further out of the money, and I'm gonna go down to the 45 or $5 wide. So I hold my control key down, left click, and there's the trade here. So, well, what? I wanted the 45. That's a $10 wide. So let me do that and 45. All right. So $5 wide spread. It's going to cost me $1.46 or $146. All right. So let's take a look at the numbers here. I'm going to go over here to confirm and send, and we see the numbers here. So first thing I look at is my break even. My break even, it's at $45, $48.54. The stock is trading at 52. Here it is at 52. So I like my break even below the
Mhm.
stock price. And then my max profit is at $146 and my max loss at 354. All right. One other thing I like to look at is I'm gonna click on edit here, and then I'm gonna right click here, and we're gonna go to a risk graph here. So I'm gonna left click on the trade there, and then I always like to look at these numbers here. So this if it went up 10% today, here's my P&L here. So this is what's going to happen today. If it goes down in price, so I can adjust the numbers here. Usually it defaults to 10%. I don't know why I did, but I can see what happens if it goes down in price. You can see the numbers here, this line change here. This is the price scale along the bottom here, and I can change the floor. I can determine what do I want to do. So if you're using like CanSlim rules, you say, hey, I want to sell this stock if it goes down 7%, or in this market we're taking profits or cutting losses a little bit sooner. I can say, well, I can adjust that. Let's take a look at 5%. So 5% would be $49.44. I can set an alert or a stop loss just to say, hey, I'm going to get out of the trade because it's down, and I just want to move on and get out of the trade here. Another thing I can do here, so I like playing with these numbers here. I
Mhm.
don't necessarily look at the graph itself, but I just looking at the numbers and looking at my P&L at a certain time and day or a certain time. I was going to say in the future, but you can go in the future just to see what this trade looks like. So I'm going to click on where is it? Okay, yeah, right here. So I've got this. Oh, first let me do this. I'm going to click on this hamburger screen, set slices, and I'm going to go to the break even, which I'm going to go to the 18th, which I believe is going to be the uh, the options expiration in February. And let me return to my slices here, and there we got that there. Let me change that. So now I can go to this box here and I can say, okay, what is this trade? Let me get it back today. So this is what we look like today. You see these numbers here? So this is the probability of the stock going up. So we got a 45 or 47% that this stock is going to increase in price, 50% that it's going to decline in price. Okay, but I want to see, okay, what is this stock? What does it look like 2 weeks from now? So I can click on this calendar here and I can go to, I need to go to January. 2 weeks from today would be January 11th. I click on that. And then my numbers, what happened with my numbers here? Well, normally it shows me some numbers here in percentages. So that's what I was counting on, but it's not showing me that. But I can still adjust my numbers here. I can say, okay, well, 2 weeks from now, what is the stock going to look like as far as the P&L? I know my max profit is at 146. So regardless of how high in price of, I can adjust this number. I can just go up in price. Let's say it goes up 20%, 28%. Well, remember our max profit was 146 if memory correct. But if this stock eventually, this number here is going to stop at 146 if I remember that's so if this stock can go up 50%, and you can see I'm changing the numbers here, and it's going to decline there. So or it's going to stop at around 146. But
Right.
this at least gives you a chance to see, okay, what could possibly happen with this stock, and this is all theoretical. So this is not a prediction. This is all theoretical. And the nice thing about it, we haven't placed a trade yet. So if we're satisfied with the numbers of what we like here, we can go back to the trade page and click on confirm and send, and then send the trade off, and we see what happens from there.
Now, Harold, when you do a bull put spread, do you normally set a stop at your break even, or where do you put the stop? Is it somewhere technical on the chart, or is it related to what the value of the spread is?
I like to break even. So this way, I know my break even is at 48.54. So I can put
Hmm.
my stop at that level and I say, okay, I at least broke even. I haven't lost anything. The trade is not necessarily worked out. We're in a shaky market. I at least broke even. I can move on and maybe just cancel this trade out, or if I purchased it or sold this spread, because we're selling it, so we're
Right.
selling the put spread. I can just close out the trade and move on to something else. So you can use your break even, or back at that chart we were looking at a moment ago, go into the analyze tab. So I can do a right click, left click on analyze trade, and I can use these numbers here. That
Hmm.
should say minus. But if I say I want to do like 5%, well, I know that's 49, 50, 53. I can set a stop loss there. You can say, okay, I'm being disciplined. I'm going to set my stop loss there and get out of the trade. So it's a couple of ways you can do it.
So one last question. You went out, uh, I guess, a month and a half, right? Uh,
Yeah.
why not use a shorter time frame? Because then the theta is going to be working faster in your favor. That time is going to be decaying.
Yeah.
Is that because the premiums aren't quite enough for you, or what's the reason?
Yeah. Well, I just go by, I like to go at least 45 to 60 days out. Okay.
Okay.
23 days was a little bit too close for me. Um, and I prefer doing the monthlies. I mean, I could go to a
Yeah.
weekly, but I prefer doing the monthly. So I went 50 to 51 days out. I'm still in that 45 to 60-day time frame. And then if I place a trade, I can monitor it from there, monitor the trade from there. So I just like to kind of stay disciplined and use that 45 to 60-day time frame.
All right. Well, I think that looks like a really interesting trade, and especially using the break even stop, it seems you can really limit your losses. Really, the only thing that can help hurt you is a gap down. If it trades into it,
Right.
you'll get stopped out. So I'm curious to see how this plays out, especially in this market.
Yeah,
Interesting
yeah,
trade.
and if it does gap down, well, we already know what our worst case scenario is, because this is a risk defined trade. We've already defined our risk. We know if this stock, for whatever reason, gaps down, we know our max loss is going to be 354. So
All
we
right.
define
Well,
our
hopefully it
risk.
doesn't. Hopefully it doesn't go all the way down there. But thank you very much, Harold, and we'll be back with another trade soon.